All right, so good morning. How are you doing? I hope you're doing fine. Let's start with the poll. Please tell me what you'd like to cover first. What are you trading today? Gold, oil, Bitcoin, and we'll put dollar. All right, let me know where you want to start, and we will do that. While you answer the poll, I'll go through the opening ceremony, so to speak. Oh, I could have. Yeah, I wish there was another one. I should have put stocks. Yeah, go ahead and answer it that way if you prefer to start with stocks. I'm happy to do that. Let's go through the organizations and communities that I am associated with. By the way, my name is Wayne McDonald. I've been trading publicly for 20 years. Before that, I was a venture capitalist. Before that, I was a high-tech entrepreneur. Before that, I worked in the nonprofit world, and I still do, actually. But back in the 90s, I worked in the nonprofit world and was on a board of directors with George Soros and the vice president of General Electric, vice president of Arthur Andersen, former president of AT&T, a member of the United Nations, which is actually kind of funny because now I manage an endowment for a nonprofit, and I was interviewed by someone that works at the United Nations in my interview process. But anyways, cool. And before that, worked at NASA because I was preparing to be an astronaut. I was Top Gun qualified by the United States Navy. But it turns out I'm diabetic, right? And diabetics don't go to the moon. So anyways, that's me. Let me know how I can help. So I've been trading a long time. I love financial markets. I love trading. I love investing. I've passed the Series 3. I have a macroeconomics degree from Harvard. So cool. There's just a lot. There's a lot. Cool. There's more than enough. So let me know how I can help. The more that you are active in our relationship, the more that we, the more I can help, I suppose. So I need participation, not just participation, but participation. So some of the organizations I'm associated with, Traders Way is an ECN, which is important because they have a service model. That's how the business model of an ECN works. So you place a trade. They execute the trade through a pool of liquidity partners. So it happens instantaneously, a process called straight-through processing. And therefore, the way that they succeed is that if you succeed, over time, you'll grow your account and you'll trade often. And over time, as your account grows, you'll have larger lot sizes, and that benefits them because they provide more services to your successful trading business. So the reason I like an ECN in general is that they don't trade against you. They benefit if you succeed, so therefore their objectives are aligned with yours. I like that, and I like Traders Way because they're honest and trustworthy. A new service that I started a couple of months ago is called TRADARS, where it generates trading plans for you using nothing but technical analysis. It's really, really, really much more than that. But just think of it this way. You're a portfolio manager for a successful billion-dollar hedge fund, trading Forex or futures or stocks or stock indices. And because you're the portfolio manager, you have a team, a staff that works for you doing all the grunt work. One of the people on your team is a technical analyst that analyzes 7,500 charts in real time. And every day when you sit down to do your trading, you yell at your grunt, "Hey, grunt, grab your charts and get your butt over here." "Sir, yes, sir." And your technical analyst will sit down and say, "Well, this is what I've seen overnight. Here's all the things I've been watching. And here's the 7,444 things you don't want to know about." Think of it that way. It's not that it provides a couple of dozen opportunities. It's like it eliminates all the crap. And it provides all these charts. This is real technical analysis happening. And here's the opportunities. You should go to your charts and decide. Maybe there are opportunities you agree with. Okay, it just does all the grunt work, technically. And it's beautiful. I mean, it's beautiful stuff. Beautiful. Like, this is what the kind of the stuff it looks at, you know. I mean, it's beautiful. This is a 4-hour chart, right? Another 4-hour chart. Right? Anyways. So look, cool, right? So great. So you're a portfolio manager for a multi-billion-dollar hedge fund. Not only do you have a technical analyst working for you to help you make decisions by providing you with charts and technical research, QuantBox is AI that does fundamental research. And so now you have a quant working for you. You understand, like, this idea that you have a technical analyst and a quantitative analyst working for you as a portfolio manager who actually makes the trading and investing decisions? Look how beautiful this is. Isn't that great? And so you can very quickly find the underlying intrinsic trend, whether it's bullish or bearish. You can very instantly and very quickly do something like that. To do this type of analysis, 10 years ago, 15, 20 years ago, I didn't use a scatter plot. I used a different method to really do the same thing, but it took me hours. Now it takes me 2 seconds. Thank you, artificial intelligence. Or like in today's video, and if you go to the YouTube channel for QuantBox, in today's video, I show you how you go from here. You're like, oh, interest rate decision today. Right? I have to expand this a little bit. I show you how to go through the process of, okay, there's something important on the calendar tonight, so how do I prepare? It's an interest rate decision for New Zealand, so how do I prepare for that? Okay, so you go here. Okay, it's loading. Remember, this is a database, not a website. And then you can say, okay, well, what are the projections for this central bank? Okay, and you find the projections, which I see here. And then you can go to, let's say, here. Okay, and you can see the difference. You're like, ooh, well, that's interesting. Or you can go here is what we did. You switch this to New Zealand. And we'll do this one. And you say, oh, wow, in New Zealand, we were here. Now we're here. So you see the shift. But you already know that that's not where the central bank wanted to be. Really? And so now you can go back and say, and of course, watch the video if you're interested more about what I'm doing in bigger detail. But you very quickly find, what's the likelihood that they're going to raise interest rates? And you can do it quantitatively now. And you have a very, very strong opinion on it, based on quantitative analysis of macroeconomic data. Some of this data we're pulling from the market. Some of the data we're pulling from the central bank itself. Yeah. And so you might be able to start building plans here now based on actual research and not opinion. Okay? And maybe, right, you start setting your trades up logically and intelligently. Okay? You see? And now you can burn through some of these in preparation for this. I mean, it's stunning. It's stunning. So, right? So those are real tools for people that know how to trade. You have a fundamental analyst working for you, the portfolio manager, the decision maker. You have a technical analyst working for you, the portfolio manager, right? Let's just log in. I think I can log in. And you're like, I'm interested in trading the stock indices today. Grunt, just show me that. All right, well, 16 minutes ago, here's the S&P 500 trade plan. Oh, whoa, what? Okay, it's amazing, right? But if you don't know how to trade, you need to go to Investor Bootcamp. It's $88 a year. It's over 100 hours of training videos. It's legit. I used to charge $1,000 for this, and then I charged $618 for this. Then I charged $382 for this, and then we got hit by COVID, which is long past. But during COVID, I dropped the price to $88 because I was worried people were going to be at home because you couldn't leave the house and we were all shut down, and that you would overtrade and blow up your trading account and lose a bunch of money just because you're bored. So I'm like, I'm going to drop the price exponentially now to practically free so that you spend your time sharpening and honing your skills and not just blowing up your trading account. It's still $88 a year. And I'm telling you, you can pick any one of these courses that come in here. And there's, like I said, over 100 hours. Look, let's do this. And let's go to this one, the oil trading course. In good consciousness, in good conscience, this oil trading course, I would say, is worth somewhere between $500 and $1,000. I spent thousands of dollars developing it because my assistant, who's building all the slides for me, is a PhD in economics. And this one course, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and these are about 90 minutes each. Like, this is 15 hours. This is included in the $88. That's what I'm saying. The level of value is totally, absolutely insane. You'd be insane not to sign up for Investor Bootcamp. That's how ridiculous it is. And you're like, I don't want to sign up for it because he wants my $88 because he's like every other guru on YouTube and he just wants to live on the $88 and buy a Lamborghini and so on and so forth. Dude, that might be true, but it's mental. I'm not saying one way or the other, because the more I argue against you, the more you'll hate it. I'm telling you, it's actually a roadblock for you. It's holding you back from an insane level of value. Now, moving on, TRADARS does technical analysis for you. It's also, look, okay, very affordable. One of the things I want to do is make it very accessible. So the starting membership is $19 a month, 61 cents a day. What do you get for 61 cents? Well, this came out 1 hour ago as you are preparing for the market open. And it has a trade plan. Remember, it only develops the trade plan if the trade plan exists. Okay? And it says, hey, man, you should check out Apple to the downside today. You should check out Amazon to the downside today. You should check out Tesla to the downside today. You should check out Google. It might go up today. You should check out NVIDIA. It might go down today. That's a lot of down. Aussie dollar might go up today. Euro dollar might go up today. Look, it's actually writing out. Rising wedge identified today at 11, right? Right? Not New York time. Although that should have been New York Times. But anyways, this pattern is still in the process of forming, possible bullish price movement towards, and there's the support, and here's the breakout, and there's the target. Right? It's very clear. It's very precise. It's doing some really nice technical analysis. So Aussie dollar up, Euro dollar up, pound dollar up, Kiwi dollar up. Look at this. Just it's great stuff. USD Swiss franc down. Okay. Bitcoin down to support. Very nice, right? NASDAQ down to support. S&P 500 down to support. Different time frames, it's 30 minutes. Okay. Hourly. It's looking at multiple time frames. Okay. The FTSE up, which is the opposite of everything else so far. Crude looks like it's got some up. Okay, channel up identified today. This pattern is still in the process of forming, possible bullish price movement toward the resistance at 90.24 within the next 2 days. Supported by an upward sloping moving average. The support was here, blah, 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 blah. Okay. Oh my God. That's 61 cents for that. So now what you should do is you should now go to your charts and set all these up. Anything that you're interested in, and in particular, not just interested in, things that you agree with. Because you already have fundamentals or technicals or you already have a bias. And so things that you look at and you're like, ooh, I like that. You're like, I don't really trade Tesla, but, whatever. This Kiwi dollar looks interesting, right? Then you go out to your charts and you start analyzing it on your charts and see what you think. Because some of these are only set up as intraday trades like scalps and spots. But very often they lead into swings and positions. So you want to look at congruency between its technical analysis. Remember, it's never wrong. The technicals are always there. We don't know the future. It's just showing you the patterns. Okay? And then you can go and say, do you agree? Do you disagree? Do you like it? Do you not like it? Right? That kind of stuff. 61 cents a day to get you started, get your mind focused, but also it puts you onto maybe the things that have the highest probability or likelihood, or think of it this way. If that was 12 trade plans, now there's 50 other things you don't need to look at. Think of it that way. At the very least, it's thinning the herd, right? Of opportunity, and it gets you focused fast. Cool, right? And of course, for a little more, you can actually access the database. And I'm not going to go through that today, but it's killer. TRADARS is killer. All right. So let's take a look at what you're interested in trading today. Okay, I'm going to end the poll. Thank you for sharing your opinion. And we have dollars. Okay, everyone's into the dollar. Let's take a look on the long term. Long term, dollar is weakening. That's risk on. Let's go to the shorter term. Dollar is weakening. It's in an up channel, but it's weakening. Okay, great. So did you notice TRADARS was selling dollar today, right? All right, so we go to dollar pairs. And all right, there's the Kiwi dollar. I'm now passing the 2618 of my TRADARS trade from yesterday. This was my scalp. Okay? And I'm trying to go to the 423.6. I know, right? But this was set up by TRADARS. Pachow, 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 pachow. Okay? Higher high, higher low, buy. Higher low, higher high, higher low, buy. Higher high, higher low, buy. Higher high, well, maybe you want to consider buying the next higher low. Cool beans. Killer. Got it. Love it. How about this trade plan I set up for you? Okay, it looks like it's working and we have a higher high. Higher high, higher low, 50%, right? I think it's even a central pivot, long and gone. Noise! Right? You took it, right? That's what I did for you yesterday. Yesterday, my profits seem so far away. All right. Euro buck. Okay, I'm worried about this in a scenario in which the stock market crashes. And so anytime there's sort of a risk off, shows up, okay, I'm looking at that. But that's not what's happening right now, right? So let's look at it from a different point of view. We have a confluence. This is weekly and monthly. And this looks like an S1R1 range. So let me mark that. Okay. This as a bottom predicts this as a top. Cool. So not really presenting the best opportunity, although Euro is quite strong. We have an ECB meeting later this week. Let me show you. Boop, boop, boo. Okay. ECB meeting right here on Thursday. Right? Isn't that nice? USD Kitty Cat I want to stay away from because, we're bearish on CAD, right? Watch today's video on QuantBox, on the QuantBox YouTube channel. It's very clear. Very, very clear. This one is interesting because we are set up to break 152, which has been unbreakable. Okay? But if it happens, it's going to be fireworks. And we've been here now for weeks. Okay? Okay, Richard says he thinks the Bank of Canada will cut. Well, again, watch the QuantBox video from this morning. It's already up on the website or on the YouTube channel if you don't have a membership. And I break down how to do that type of analysis for the New Zealand dollar. But of course, you should just carry that forward and look at the CAD interest rate decision tomorrow. Do the same analysis and find out, is there going to be a cut? You don't have to guess. You can do the research and then have a much higher probability. There's no reason to guess. You have all the data. Okay? And even if you don't have QuantBox, you can still get the data manually and go figure it out. It'll just take you longer. I value my time. Time is more valuable than money in most cases. But if you don't have much money, well, then you have the time. It doesn't matter. I don't care whether you use time or money. You need to make informed investing and trading decisions. So anyways, this, if or when this breaks, it's going to be a doozy. Fireworks. Fire! Okay? Yeah. Interesting, right? For sheer. And then this is just a basic swing. Okay? Basic swing. Anyone in the swing trading group at Investor Bootcamp knows this. This is just classic, boring, nothing interesting. I don't even like the British pound, but it's still a very basic trade setup. For example, it's like you can't short it, but you can buy it. And if you bought it somewhere along the line, meaning that there's really two opportunities here for people that are technicians, technical, right? If you're using technical analysis, if you're a swing trader, this is the most basic swing there is. But you're like, but I'm bearish on this, and I was worried about the stock market, and I thought this could come down. Oh, yeah. Nothing wrong with that thought process at all. But this is classic. Again, I mean, how do you say it? Lower low, higher low, okay? Higher high. I mean, dude, like, you're either trading this or you're not trading this. There's no other conclusion, is what I'm saying, if you're using technical analysis. Okay? Right? Very, very basic stuff. Okay? Swing bottom to a daily up to a daily pullback. Okay? This is a typical Asia fade. Okay? And you're like, Wayne, what do you mean by Asia fade? And what are all these lines? And what are these pivots? And what do you mean it's a basic? And then let me go back here. You take this, okay, you join Investor Bootcamp. You go to day trading 33 to 99. Okay? And you start here. And you take this course. And now you'll know exactly what I'm talking about. At 8 p.m., it goes. See? Cool, right? Like, it's very specific. Nice, 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 nice. Okay? It's nice. Don't you like, dude, this course here is worth $500. Anyways. It's nice, right? Template with checklist because of the time of day. These things, when you complete a very it never comes back. Now drop it into. Okay, so now you have TRADARS that can do all this for you. Anyway, so I'm just telling you, it's insane if you're watching these videos every day and you're not a member of Investor Bootcamp. Like, it's insanity. Okay? Yeah, Denise. Yeah. When you're on, when you're talking about that yen. Oh yeah. So the reason it'll do it though too, think of it this way. Much of the market sees that we are at support, or I mean resistance, right? So let's just clear this out. Let me just make this a very basic, simple chart. Okay, as clean as you need it to be. And well, there's daily. So let's zoom out a little bit, and you can see where we are, right? I mean, like, to the wick. It's insane, this price that we're on. And we've been here a while. All right. So lots of people believe we can't go higher. It's resistance. They're going to believe it. And they're going to say it's a double top, it's a triple top, whatever. They're going to say it's still the central bank fighting against it going higher. Sure. I got you. So of those traders with those beliefs, and remember, we don't know the future, but we can understand what they're doing. They might be right, they might be wrong. But we know that this is an important price. So where did they put their stops? If they're short, if they think down, right, the end of quantitative and qualitative easing and yield curve control, then what? Where's the stops? Here and here. Remember, there's tens of thousands of traders with variations of the same plan. Okay, and this is all their stops. Now, if something happens in the market and the dollar gets strong and this goes up, let's say it has nothing to do with the yen. What happens if these stops get touched by price? Well, the brokers that are providing these trades have to buy the shorts back. So what happens is people who buy now in anticipation of the up, okay, they're buying now, let's say, and everyone else is already short. What's happening is they're already in. So the next wave, if we're going to do something like this, the next wave of buyers is not bulls. The big pop that Denise is anticipating, 100, 200, 300 pips up, that pop is not buyers. It's sellers exiting for a loss. And the exit gets executed as a buy, as a broker to offset the short. So the bears are buying. The bulls should already be in. What amateurs do is wait for it to pop and then buy it up here. And what do they get? They get this, crumbs. Slow as molasses on a cold Georgia morning. But somebody bought it here in anticipation of actually higher than that. Okay, there. That's actually correct. Now those are annual pivots, but nonetheless, you're right. Probably more like that. Or a variant of that, a variation of that. Okay? But the interesting thing about trading and investing is if you're a bull, you get paid when you take the bears out. That's what creates the pop. Not more bulls getting in, it's the bears getting out. That's why you should have an opinion so you can be in the earlier move, not the after effects, not the second or third or fourth wave, right? Very often amateur traders, like if you think of, Elliott wave, you have 5 waves and then a correction. Most amateur traders are so unbelievably late because they don't do long-term technical analysis or they don't do fundamentals. They don't have any forward projection. Your own personal forward guidance. We call that bias. So by the time an amateur trader gets in, they're in wave 4. Well, we all know after about 5 waves, then you get a correction. Okay? Richard's saying try to get in wave 3. Now, I don't count waves, so here's what I do. I buy the dip. I don't care if it's wave 3 or 5. But the thing is, I'm prepared in advance, right? And so I think there is a chance if you believe up, it'll happen so fast, you'll miss it. All right. So, is there anything on the calendar that could, by the Bank of Japan, is there anything on the calendar at the Bank of Japan that could lead to this popping to the upside? So you go to your calendar and you think, right? Think, Pooh Bear, think. How do I get the honey from the honey pot? Right? You think, is there anything on the calendar? What's the catalyst? How about CPI tomorrow? it comes out high. Stock market drops, dollar gets strong, USD yen is at 53, 54, 55, and it's gone. Richard says Bank of Japan might want to intervene. Well, you read their notes. Master Trader says the same thing. Okay, well, make a decision. Okay, Greg says buy stops, right? Buying dips, right? Is that what you're saying? Like there's two philosophies, right, Greg? There's the I'm a bull, so I put a buy stop. I'll make that in green. 382, 50%, 618. Somewhere in there you put a buy order. So that if or when it comes down, you're in. Oops, I wanted that to be blue. Let's go back to blue. Okay. The other one is, the other opinion here is, and I don't tend to do this, they put their stops here, or their entries here. They say now, if it makes a higher high, buy it. I hate that. I hate it. I've taught people at Investor Bootcamp why. I mean, you could do it, and I end up doing the same thing. I end up buying it at that price, but not that way, not with that methodology. Okay? And I don't like that strategy. And because what I've found in my own trading history is that you have to suffer through, right, the pullback, and that created a lot of stress for me in the early days. I've found honestly, in my early days of trading, I found I would make a trade. I'd very quickly be up like 10, 12 pips. And then I'd go minus 25. I hated that. I hated it. So if you read my book, one of the things that I talk about in my book is my minimal acceptable performance and stuff. So I had analyzed my trades. If I could make 15 pips, I knew I was going to make 50 pips. But more often than not, I'd get to like 10 or 12 pips, and then I'd go negative 25. But if I can get 15, I knew it. I caught it at the right time. So, oh my God. It was painful. I mean, like ulcer. I think I actually had an ulcer for a while. Undiagnosed ulcer. Have you ever had like internal bleeding from your trading? I have. So it was physically and mentally and emotionally painful. So instead of buying here, okay, and sometimes having it go up, which was great, which is probably wave 3, or a wave. Sometimes it was more like a wave 5. Okay, a variant of that. So what I decided that since more often than not it did pull back, just based on my own trading behavior, I still bought at that green price. That was the most amazing thing of studying my trading history in such detail in those early days, is I realized I could wait and buy the same price later, and it would cost me, usually, statistically speaking, nothing. I'd see it pop, and I'm like, oh, look at that, it popped. I'll catch you later. And I discovered price action. And I get more detailed in the day trading course, but this idea of trading inside the wicks and stuff like that. Master Trader says, why do I hate the pound so much? Well, first of all, I'm a lover, not a hater. Okay. The second thing is economically, they're very much strained. Okay. And just out of, another interesting tidbit, now that you made me think of it, Master Trader, I've traded probably 10,000 times on the pound yen. I bet you 2/3 of them have been shorting. It's an interesting thing where I never really thought about it until just the second, but in the periods in which I am buying yens due to seasonality, very often I'm long like Euro yen, Kiwi yen, Aussie yen, CAD yen, all that kind of stuff, and some pound yen for sure. But when the markets are bad, oh my God, I have memories like of the beast, the pound yen, the widowmaker, more than any other short. Like more than the only other short that I remember so much was selling the hell out of the Aussie dollar. I mean, insane. Okay, like 5 to 10 trades a day selling Aussie. I'd run out of things to sell the Aussie against. And then I'd have to rotate and go around the cycle and go around the cycle and around the cycle. And for very long periods, for not just weeks, months or to a year or multiple years. So Aussie for sure. But Aussie doesn't have the volatility that the beast has. So in Barcelona, for example, in 2007, I was on a panel discussion regarding trading for FX Street at a live event, and there was a bunch of other professional traders on this panel, but we were right at the very beginning of the financial crisis. And so we all had this panel discussion, and then people stood up in the audience asking questions, and they're like, dude, give us a trade. Give us a trade. Nobody wanted to offer a trade plan. Well, it's difficult. Technically, it says this, and fundamentally, I think that. And I'm like, dude, I'll give you a trade. I was as blunt and as clear as possible. I said, this particular event happened, and I guess I can go through it here. I said research has just shown at that time the largest purchase of 3-month treasuries in the history of the U.S. Treasury. That's how dramatic the great financial crisis was. And it hadn't even begun yet. They were calling it a subprime problem. And the Bank of England said it was just a problem with the Yanks. Had nothing to do with Europe and the UK. This is where we were. At that time, the ECB was actually raising interest rates. Just insane. Okay, so that's how early this was. So hedge funds just started to get out of the stock market, and they bought 3-month treasuries. So I said to the audience, okay, we had this great stock market decline. The first wave happened. And I said, okay, well, we know it seems like the vast majority are just parking their trades in a 3-month treasury just to wait and see. And if there's a recovery, they'll take when the 3-month treasury expires, well, they'll just buy the stock market back. But if the market doesn't recover in 3 months, because we know they bought a 3-month treasury, so in 3 months it'll expire. So in 3 months, if it's worse, they'll just take that cash and buy another 3 months and wait. Just park and wait. So there I am, and I'm like, look, so we know somewhere around this time, and I don't remember the time, but like I said, well, this occurred a few weeks ago, so we can guess, we can extrapolate. Not everybody bought on the same day, but they bought roughly around the same period. So we calculated it out. And someone's like, oh my God, we should have a special event on that day. And I'm like, at FX Street. And I'm like, whoa. It's not all in the same day, but it's roughly a period. Like you should be ready, willing, and able to spot the technicals. And then I said, around that day, so let's say in 5 weeks from now, I expect the pound yen to drop 5,000 pips. This was recorded, by the way. What kind of knucklehead would say something like that? Being recorded in front of in front of a group of professional traders that give no call, to a live audience and a recorded audience. And I'm like, yeah, so I think in 5 weeks there's a possibility pound yen drops 5,000 pips. Well, I'm sorry, I was wrong. Right around that period, the pound yen dropped 8,000 pips. So I remember those, the volatility, like what's the word I'm thinking? The velocity of the drop. I always remember pound yen. But the consistency of just selling Aussie, just every day, the routine. The only other routine that was very, very obvious was before I was a professional trader, while I was still a venture capitalist, I did a lot of Forex trading day and night, okay? And there was this process in the early days, because I didn't know anything. I just absolutely knew nothing. But I would wake up in the morning. I don't think I even had charts, honestly. This is how naive I was. I would log into my account and I would buy euro dollar. At random times, for no reason, didn't even have a chart, didn't know anything about technical analysis. I didn't even know news. I'm like, really? There's news about Forex? Like, honestly, I started as a blank slate. I mean, nothing. I had nothing. But I would buy the euro dollar. I'd come back in a few hours. Oh, made a few $100. Sweet. I call my dad. Hey, Dad, just made $500 in euro dollar over the last 2 hours. He's like, cool. He's like, I made 600. Really? When did you do that? And he's like, well, I bought euro dollar, took the dog for a walk, came back, made money. And then he's like, then I ate breakfast. But I bought euro dollar first. I ate breakfast, took a shower, came back. Made $300-400, right? Like, it was just funny. Like, that's all you did. You'd buy euro dollar and you'd come back and cash out. Like, no charts, no nothing, random points of the time. Oh my God. But I do remember those days, and I look back now, I'm like, oh my God. Do you know why I didn't trade pound dollar or pound yen back then? The spread was 13 pips. Oh, hey, David. Good to see you. Yeah, that was the biggest trade I've ever did, right? Yeah, Yeah, what's up, buddy? Yeah, I don't want to get into that. You know, this is too much about me today. But anyways, we were talking about volatility and we were talking about shorting and all that kind of stuff. And I guess today's little story about that pound yen setup is this idea that we know where the stops are. We don't know if they're going to get hit. But for everyone that's got this arrow pointed down, they have stops above price. And I don't blame them for having it short. I don't. it's real resistance. There's real rationale. You could say the Bank of Japan is going to hold the line, and that could very much be true. I can't disagree with that. But if this goes up, it's going to pop. Not because of bulls. Bulls already bought it. Only retail would be thinking about doing something now. And you're like, really now? Why now? Why not when inflation started going up 2 months ago? Okay. Where would that be? I guess it's this one, right? Okay. Somebody bought it here, let's say. And now it's just, is it going to kick off the 21? Yes or no? Well, we don't know the future, but you need to be positioned that way. Is it going to pop? Yes or no? Showing up today and making those decisions is not good enough. Okay, not good enough. Now, you can analyze and break things down into digestible pieces. We could maybe organize this if I can grab that. I don't think I can grab it. It's too far out. Yeah, I made it too far out. I must have gone weekly or something. Okay, let me bring this in. All right, let's do kind of an exercise here. You can't anticipate when it's going to break out, although you can guess. I still can't grab this stupid thing. Oh, that's because I'm on a 1 hour. You can anticipate, let's say, after tomorrow's news on CPI. If CPI is high, dollar gets strong. Okay. Okay, so you could say, well, we're at top of a range and we're at a bottom of a range. Okay, cool. Now, I need to ask you, and you need to be able to answer clearly, not sort of hedging your answer. Are you a bull or a bear? If you can't answer that, you're a pig, and pigs get slaughtered. The other answer is, if you don't know, you're a BAT. It's an acronym, a broke-ass trader. You're not getting paid because you're not making the big boy decisions. You're not wearing your big girl panties. You need to be the boss. You need to be the decision maker. Okay. Once you have that clear answer, okay, bears are selling. This is a sell price, not a buy price. What kind of bull buys at resistance? There are none. Broke-ass traders, bats buy at resistance. Okay, pigs can't make decision, and bats do everything upside down. So if you're a bear, dude, get ready. Because this ain't funny. My name's Mike D, and I'm about to make money. Pulled out the jammy and aimed it at the sky. Yeah, cool. Sorry, I had to get that out of my system. So you're getting ready, maybe now in a smaller time frame, you are getting ready to sell. Here's a 5-minute chart. You're already short. Bro, dude, bro, you're already short. Okay? Why is that? Because bears sell at resistance. Is this support or resistance or neither? This is resistance. So if you are a bear, you sell at resistance. Is it going to work out? Oh, I don't know. But that's what you do. If you don't do that, I don't know what you do. Probably indecision. Okay? Cool. And your first target would be the bottom of the range. Now, you could hold it and anticipate a lower, but the way I've taught, and David Pegler's here, right? So we go back, Pegler and I go back probably 18 years, and he can confirm in even those early days, I would say that when you're in a range, the market will move sideways forever and ever 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 until it breaks. It's going to move sideways forever and ever 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 until it breaks. So you would target the bottom here. And why would you do that? Because if I'm a bull, I'm going to buy it at the bottom. Sure, Pete. I can do some natty for you. Okay? Yeah, I'd say the trend is your friend until she betrays you and stabs you in the back. While I was gone, there was some great training, right? Yeah, what a friends for. Coach Ryan did some great training at Investor Boot Camp last week while I was in Europe. And it was this idea of the trend remains until it reverses. And you have to have a clear process, a mechanical process to know exactly when that happens. And until that happens, the trend will remain. And the way you handle with emotion and fear and greed is process. Right? And it's all part of that. Oh, yeah. No, you're right, Richard. David is a fantastic trader and coach. Absolutely fantastic. Ryan is fantastic, too. And they're both from South Africa. How does that happen? So anyways, so we'll go back to this. If I'm a bull, okay, I look to buy at support. And look what I did to identify support. So you're like, how do you know these things are going to pop at this level? Well, you don't. But that is support. Could I have a secondary support? Yeah, I could. I could connect all these little wicks, right? Let's do it this way. Sure. Okay. So what does this tell me? To me, statistically, they're irrelevant. It doesn't matter the same price. But we have two ops. What does this tell us? If I'm already a bull, I know precisely the price I intend to buy. Because I'm a bull. I just answered one of two questions. The price I intend to buy. Price is plotted, okay, on the chart. Price. The other thing on the chart is time. So the one thing I don't know is when will I buy? I know the price I will pay. Do you like the confidence I'm trying to get you to have this level of confidence. I want you to have the training you can fall back on so that you can make the right decisions or enable the right behavior in the fog of war. Okay? There's boot camp and then there's active combat. Okay, right? I think they have boot camp for a reason. Even if it's just to weed you out. Okay. Okay. So you're patient, you're disciplined, you wait. Why? It's a time issue now. I know exactly what I intend to do. I know exactly the price in which I intend to do it. And now you wait. Did you know David Pegler is a patient person? He's patient. He can wait and observe longer than anybody. So you know your intention, right? You know your objective. You want to be a bull. Okay, you know the targets, and not price target, but entry target. You know when you have the green light to engage. And now that's the easy part. If you can't do that, you can't do that. Right? If you can't figure out the price and the direction, meaning bull or bear, you need to work on that. Don't worry about anything. Just stop trading. If you don't know if you intend to buy or sell in advance, stop trading. Learn how to do that. Okay? So we got the direction up. If you're a bull, right? That's your direction. If you're a bull, you know the price. And now you wait. Okay? What are the two outcomes? What is going to happen here? Okay? Something like this happens. And now on a smaller time frame, you engage. You look to buy. So now you're on a 5-minute chart, maybe looking for, a 1, 2, 3 scenario. And you engage on a 5-minute chart to the upside, which puts you long right about here, kicking off 150.80, and you're going long. Or what? It goes up. Huh. Well, hell's bells. You had a trade plan that didn't come to fruition. Is it a failure? No. No. So now what do? What's your counter attack? Because you're a bull and it went up and you're not in it. Well, you should be in down here, or you should be in down here or down here, but whatever, you're not on it now, and it goes up. Okay? What'll probably happen is you take a couple of these out, so it pops quickly, and the first wave of bulls from here, or even probably a lot lower. Remember, not everybody is patient and disciplined as you. Okay? And they're going to panic and take profit. I don't think it's greed. I think it's fear. Greed leaves you into the trade too long. Fear says, oh my God, like I'm sure we've all done this at least once in our career. You took profit simply because you hit 100 pips. Well, you saw 100 pips and nobody else. Nobody else in the market knew you made precisely 100 pips. and you said, out. Why? 100 pips. Pfft. Really? Right? And it's fear of losing those losses. You're so ecstatic that you didn't lose money that you can't believe you made money, and so you better get out quick. That's why amateur traders have big losses and small winners. Okay? So anyways, going back to this, there'll be the first wave of profit taking. And now what? Well, you've analyzed. Remember, you're a bull. You only buy at support. What? Cool. Well, we're support. Well, we call this a role reversal. Used to be resistance, 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 higher high. Remember, I was just talking about this idea where when I first learned how to trade on my own, I would buy a break of this, and inevitably, the thing that ended up happening is something like this. And I would be profitable for a while, then I'd give it back, then I'd go negative. I hated it. And very often I'd jam my stop because of it, and then I'd come out and get knocked out of break even. And then what's the story we've all known? It goes without me. And so after years, blood, sweat, and tears for years, I realized I can just wait for the pullback and enter here instead of here. It's the same price. Ha ha! So that's my plan B. This is my plan A. And now I wait. Ready, willing, and able to engage on my price, and I wait for the right time. Master Trader says once those stops are touched, where it went, yeah, but it will come back. Or it won't. But I will be patient and disciplined to wait. Okay? I will not leave my wingman. I will not break rules of engagement. I am patient. I am disciplined. I am strong. If it doesn't come back, it doesn't matter to me because I'm not on it. Chasing it leads to a weak trader. If you chase price, you are weak. You can't be mostly disciplined. You can't be a little bit pregnant. You're either 100% disciplined or you're weak. And there will be a reckoning for that weakness. Okay? Nature will call the herd. The sick, the weak, the slow get slaughtered by the wolves. Ow! So, okay, if this pops and you're not on it and you chase it, you're weak. And you're like, oh, well, I'm going to miss it. I'm going to miss it. I'm going to miss it. No. All these stops up here, you missing it? No. That's the point I've been trying to make. If you're only on this now up here, where the heck were you here and here? This is where you should be in. And now if you're a bear, you should be selling here because it might fall. I don't know. I'm just saying if I'm a bull, I buy at support. Bro, we've been at support for a while. Where were you? Where were you? You should be in here. You should be in here. You should be in here. Not chasing price way up here. Dude, like, you're so late, it's embarrassing, right? Like, whoa, dude, that's the problem. And then if you are that slow And then when it finally pops and everyone that made rational, logical decisions down here and down here and down here, while they're getting paid, you're buying. Who are you buying it from? This dude. This dude makes 500 pips and sells the position to you, and you think it might go up another 50. Sweet. This person doesn't give a crap. Okay, you're a liquidity event. And this is what I'm teaching. I want you to be the strong. I want you to be the boss. I want you to be strong, patient, and disciplined. You can control your behavior. You can't control the market. If you can't control your behavior and you can't control the market, you are not going to be success. Okay? Okay? Yeah. Very often you'll find that, those with military experience or athletic experience do well in the financial markets. They're probably coachable. They're probably disciplined. Okay? If you're not coachable and you're not disciplined, it may be impossible. Let's see if anything else is going on. So I have a bunch of trades here. Kiwi dollar we covered. Oh yeah, the yens. So I'm long Aussie yen. Aussie yen here. Nice. Okay. All right. Uncle Wayne, walk me through the trade. Okay. Seems like down here, let's do it this way. Seems like down here was a bottom. Don't you think? And then it made a higher high. What do you think about that? Buy the dip, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher. Oh, consolidation, higher high, higher low, consolidation, higher high, higher low. And notice that the consolidation and rallies work around market opens. So it consolidates at the end of the day when nobody's trading. That is shocking. And then Asia opens, then London opens, and then New York opens, and we rock and roll again, huh? How would you grade that trade? 10 being the best, 1 being the worst. See, I could have been in earlier, right? Well, it's not the best trade because I'd say the better trade is here. Okay? But I saw this higher high as well. Okay. You could also have been in this one, which is a standard 1, 2, 3. Very boring setup. Like, this is as basic of trading as you can get. So, but you still have executed well. Okay. Yeah. And of course, many other trades have done this already. You can look at Euro Yen. Okay, very similar. Let me give it one more click in. At some point, you recognize higher lows. Some point you recognize higher highs. Now, I'm late on this one. Okay, I'm late on this one. Okay, higher high, higher low. It would be great if I had caught that, but for some reason I didn't. Higher high, what did I do? Okay, I kind of did something in here. It's a little vague, but you get the idea. And now it's higher high, higher low, higher high, higher low, higher high, higher low. Okay, higher high, higher low, higher high, higher low, higher high. And to go back to David Pegler's point, it will do that until what? Lower low, lower high on whatever time frame you're going to use for analysis. On what part, Jim? Getting out or staying in? Yeah, well, you know, it's hard. Yeah, I gotcha. That's the hardest part of trading, in my opinion. Getting into a good trade is not that complicated if you have some experience and some knowledge, and I know you do. I mean, I've known you for 20 years, right? Yeah. I don't think it ever gets easy. So going back, I think I think I just made a decision. So I watched one of the Coach Ryan videos that he did while I was in Europe. And he coached, I think it was the swing trading group just last week. So I think it was Thursday of last week. And it was spectacular. So I think I'm going to release it, put it on YouTube or something. But it lends to this issue, Jim, and I think you'll appreciate it because in this one and Denise is working with him in this video where they are using a candle by candle by candle simulator and talking about okay, we've hit a pivot target. Do you take profit or not? That's the hardest question in trading. I don't care if you have 50 years of experience. When do you take profit? That is the most challenging, most stressful part of trading. That's where you're going to lose sleep. I think I even talked about that in my book, where I said amateur traders worry about losses. Professional traders worry about profit. because you start freaking out. And especially, if you have more than 100 trades open and you're up 30, 40,000 pips, that's all you can think about. And every little 100 pip pullback in the market is thousands of pips. You're like, oh my God, that's so... You can't sleep at night. And so anyways, the part of this video, which I think you really like, because I know you know what you want to do. I know you know how you intend to do it. I know you know trading. So like, this is one way that's presented like, okay, let's have a mechanical way to make that decision. And the mechanical part might help. And it's really good. It's a 2-hour video. It's really good. Now I watched the whole thing front to end. It's really good. Denise is in the, it's her charts and her trading and all that. It's really good. It's really good. Now, I don't necessarily agree with every decision, but nor do I have to. Because every single person is making their own decision. And that's what we call alpha. I think getting into a trade is relatively easy. When to get out is the actual alpha. Your ability to let's say beat the market without taking additional risk. And so, wow, you're at a monthly R2. Do you take profit? Or do you stay in? Now, I have certain rules of engagement that I've learned after 20 years that may or may not be the best rule, but I have rules. So if it were me, I take profit. And I've taught that for 100 years. But it may or may not have technically changed. So if you have a mechanical process, and what I mean is it's not an emotional process, it's like a binary process. It's either reversed based on definition or it has not reversed by definition. If it has not reversed by definition, you stay. Now, my experience, which is my personal experience, you have to realize too, your personal experience may not actually reflect reality. And you create this subconscious bias of what you think is true. Okay? Very often it's not true. But what I do in various situations is if I'm at a monthly R2, unless I have a seasonality rationale, which is, not common. So most of the time, if I'm at a monthly R2, I do take profit, even if it's still bullish, or even if it's still bearish, I always get out at S2. And I call that the law of the averages, where let's say 50% of the time it goes up, 50% of the time it comes back. Therefore, if I just see that 1,000 times, I can just get out and end up getting the same result. But I'm not married to this trade anymore. And if you're sweating bullets over stress over these profitable trades, well, now you're not stressed anymore. You've gone to cash. Has my fundamental or in this case technical, right? And I'm still responding to your point, Jim. Even if I've taken profit in a situation where the trend hasn't reversed, then I'm inclined to buy that dip, which I expect. That's why I took profit. And then let's say you're up 300 pips, then it comes down 100 back to, let's say, a daily 21, and I buy it back, and I'm back into the trade again. I've removed some stress, and then I re-add it. Now, do I always do that? No. Is it always that way? No. Are there times, is there a finesse where you can break that rule of engagement? Yes, and that would have to do with seasonality. So I wouldn't behave that way in September, but I would in October. You're like, Wayne, what? Well, yes. Well, it takes a while to get this experience. But you'll never do it if you don't do the simulation and get good at price action. You see? Right. Well, so master trader, what happens is you're fading in and fading out. It's more of a risk management scenario because there's a consequence to everything. And I don't know if I've done everything, but I've done a lot of strategies. And I've been in situations where I'm in 100 trades. More than 100 trades, but let's say at least 100 trades. And I didn't have as much sense of seasonality. So I'd build these large positions, and then I would have massive runs, and then I would have it's not a drawdown, but it's a pullback. And that's where it's a nail biter. It's truly a nail biter. And then it comes back. And having done that, the emotion and the stress is, for some, a way to focus. And I imagine this is helpful if you're in a military active combat. I've never been in military active combat, so I don't know how I would respond. But I think for those that get hyper-focused, probably do really well versus freaking out. Right? So if you can just engage and carry out your training. So I would engage through this stressful period. And I'm telling you, like I was saying, like physically, emotionally, very, very stressful. But I'd keep going back. I'd go through my charts. I'd go through my analysis. How do I get here? Do I still have this belief? And what it did was it allowed me to mature and then sort of add scaling in and scaling out to managing the portfolio position. So you have that period of some of the trades you're taking profit on, some you're not. Because the trend hasn't changed, but there are times to go to cash. And then you get the expected retracement. Maybe it's fundamental, maybe it's seasonal, maybe it's news related. The difference are timing, basically. Is it down for a week? Is it down for a month? Is it down for a couple of months? So some you can engage and take profit. Those are the smaller trades. So like some of your trades, like if you're holding trades for 6, 7, 8, 9, 10 months, for example, some trades you might be up 1,000 pips. But when you run into the resistance, hey, master trader, if you run into what you believe to be that resistance, that lull in the market where you've been long in some of the trades, you're up 1,000. But if you're up many trades, some are only up 100 and 200. Okay, 50, 100, 200. So you start saying, okay, now you expect a reprieve, some profit taking for whatever reason. You don't believe the fundamentals have changed, but this is a place for profit taking. So you say, okay, I'm not going to kill the trades that are up 1,000. But what about the ones that are 50, 100, 200? Okay, you fade out of those. You put those pips in your pocket. And then you ride out the storm. And because you're such a good technician, you're able to buy dips because you're doing your technical analysis to, like on this euro yen, it was down, but then suddenly the technical analysis says, well, it's now up, so now you start buying. Well, that's just technical analysis, right? You see that? And then you rebuild the position. And it's a form of hedging, not by selling, but by putting the pips in your pocket. So let's say it dropped 300 pips, but if you put 300 pips in your pocket, it didn't drop 300 pips because you weren't exposed to that. And now you have those 300 pips, which you put back in at the lower price. And then you know because you have the trend behind you, it goes from the lower price to the higher high. And you're just kind of cutting off a top and then buying the new higher low. Is it easy as it sounds? No, of course not. But you're right, Master Trader. It's much different. By the way, if you only have one or two trades open, it ain't going to happen for you. I'm talking to everybody out loud. You're never going to live in a mansion and have helicopters landing in your backyard. And you're like, I don't know, should I get the Lambo or the Bugatti? I already got a Lambo. I guess I'll get a Bugatti. Okay. And you're like, really? Well, how many trades are you making? Well, I have 2 euro-dollar longs. Dude, you're not big. You're not scaling. Okay? Right? Yeah, so Master Trader says, okay, to be honest, all these years I worked on your strategy and Ryan's Market Opens, and they work perfectly. Yeah. Okay? This is the last stumbling block. This is managing a portfolio. Yes. Absolutely. Okay? You're constructing and managing a portfolio. Now, I teach that for trading and investing in stocks. Right? I manage 3 endowments. And so it's the same type of strategy. Now, you're saying you need more expertise in managing that as a Forex trader. Yeah. Yeah. And that's most advanced. The reason I don't really have a training course on that is I don't find enough people with that level of success. And then the funny thing about it is I think it's because the few people that have that level of success just move on from what used to be FX Bootcamp, which is now Investor Bootcamp. They just move on. Like a David Pegler. Right? I've known David Pegler for 15, 20 years. I've seen his account with hundreds of trades open. I know he knows how to do it. But it's kind of hard to for the audience of five people, it doesn't make sense to build a trading course on managing hundreds of trades. Can you imagine an amateur retail trader just says, oh, I guess I need a whole bunch of amateur trades, or a whole bunch, I need 100 trades open. Shitty trade, shitty trade, shitty trade, shitty trade, shitty trade, shitty trade, shitty trade. Like, no. Okay. So it's too dangerous. It's kryptonite. Okay? Yeah. But we need the course. Yeah. We need the course. Yeah. Yeah, someday. How about that? Someday. There's lots of really cool things happening. With all this new AI that I'm offering traders, I think it's going to free some things up for us. And maybe, I can't promise you that QuantBox and TRADARS is going to make you more successful. But I'm shocked when people sign up and then quit. I don't understand. How could you sign up for TRADARS and then quit? I'm like, to me, it's like the quitting is going to be the problem. I'm like, oh my God, you don't like this? What is it that you don't like? Blah, 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 blah. Yeah, it's whatever it is probably the thing that leads to failure. So, but once you have fundamentals behind you, once you have technicals behind you, once you know how to trade, so that's the trifecta, right? Learning how to trade at Investor Bootcamp, having TRADARS, having QuantBox, you put all 3 together, then maybe we do go to the next step, like for Master Trader, right? Going to master with this idea like, okay, now if you happen to define that level of success, how do you construct and build portfolios? Well, you can't do it if you don't have fundamentals. You couldn't do it without QuantBox. So, but now that you have QuantBox, well, maybe I can teach these things, right? Cool. Cool. Neato. Maybe we can. Or, JP was asking last year a lot about how do we open offshore accounts and how do we get incorporated and how you're like, oh, we need to do that. Many of you want to know, how do you start your own hedge fund? So I can teach you how to do that, how to raise money and raise capital, but maybe that's obsolete. Maybe you're more interested, how do you get $1 million in prop trading funds? Well, that's cheaper and easier than starting your own hedge fund, because if you don't know sales and compliance and marketing, you're doomed. I don't care how awesome of a trader you are and how good your track record is. If you suck at sales and marketing, you ain't going to raise money, right? So maybe it's just easier to be a prop trader. So maybe we do that instead, right? But my point here is AI lifts us and elevates us to a new level. And people that don't join, if you don't sign up for QuantBox, or if you don't sign up for TRADARS, or if you sign up and then quit because you don't get it, those people are going to be left behind. And everyone else is going to be elevated to a higher level where we can start talking about building positions and portfolios of currencies. We can do some amazing things. I can bring in my hedge fund friends and start discussing those types of strategies, and you would get it. You would understand it. Okay, talking to my buddies, we don't talk about what happened today. Our conversations are where do you think we're going to be in 1 month, 3 months, 6 months, at the end of the year? We never talk about the MACD cross on the 15-minute chart. The other thing, too, when we're talking about currencies, this is just funny, a little tidbit here. Someone can throw out an euro yen at 164. And we all see it in our mind, just talking over the phone. And you're like, oh, why? Because you're watching these charts. So, and you know it so well, right? So anyways, it's just, you would need a higher level understanding to have those conversations, but some of you are getting there. And I think AI will elevate way more people up because you'll have solid fundamental analysis. You'll have solid technical analysis. And very often, over the years when I work with people, they're like, Wayne, I'm really good at technicals, but my fundamentals suck and I need to work on that. Or, Wayne, I'm really struggling. I need to learn this technical thing, right? I need to be better at moving averages. I need to be better at pivot points. I need to use multiple time frames, all this stuff, right? Well, now you just have a machine do it for you. And then it feeds you information and intelligence so that you can make not artificial intelligence, but actual intelligence. And you say, I'm going to use this in my trading and investing decision-making process. Kyle says, doesn't theoretically, if everyone adapts this technology, then everyone it dilutes the results, therefore making it more competitive? Well, two things on that. If everyone is buying euro yen goes up. So whatever process you get to make your decision to buy euro yen, it might make other people buy euro yen, and then everyone's buying euro yen, which means euro yen goes up. The second thing, and this is becoming more and more clear, it was actually a kind of a fear of mine, and I saw this during COVID, but now I'm seeing this with the early adopters of my AI services. Some people sign up, not most, but some sign up, they look around for a week or two, and then they quit. And to me, it's heartbreaking And maybe a disservice of mine. Maybe I need to do something to help, to help these people. Because they are deciding to get off the bus. They're deciding to get off the train. They're deciding to be left behind. And I know it's a mistake. Okay? Right. Well, Jim's saying they don't get it, or I don't think it's or they're not willing to learn. Oh, thanks. I'll get back there, Pete. But it's a decision to be left behind where Kyle's like, well, if everyone has these tools, and I think you were kind of saying this, Kyle, then doesn't the success get diluted out? No, because a small percentage gets elevated to a higher level game where now you are trading and competing in this competitive market like a multi-billion-dollar hedge fund. To get the data that you're now getting for $200 or $300 a month, if you sign up for all the programs, it's $200 or $300, right? You are getting the value that cost professional investors and traders just 5 to 10 years ago would cost like hundreds and hundreds of thousands of dollars. So when someone comes in, they pay $80. They look around, they're like, not worth it. That information used to be hundreds of thousands of dollars a year, and they're like, it's not worth $80. So I don't know why they don't get it, but they will be left behind. They're deciding not to trade with that level of intense data. And it hurts. It hurts. Like I'm like, oh my God. So I need to find a way to make it not better, but more obvious, I guess, so that somebody shows up and goes, oh, wow, this is really cool, but I don't quite get it. And then we offer something and they're like, oh, snap. Oh my God, this is amazing. Right? Yeah. So anyways. Yeah, Kyle says, yeah, for the cost of just getting the futures data. I mean, it's so, you wouldn't believe how expensive it is. And for me, for the price to be so low, like, I don't know. I showed, so like I said, I have a few friends that run hedge funds, and I showed them both QuantBox, and then I showed them TRADARS before I launched it. And one of them said, how much are you going to charge? And I said, I don't know, less than $100. And they're like, oh. He thought $1,000 would be reasonable. He's like, dude, I paid $2,000 a month for my Bloomberg. Like, dude, this is just another cool tool. He's like, I got a lot of cool tools. But like, he thought it was stupid. Like, honestly, his reaction is like, dude, this is worth 10 times that. So, like, again, it's heartbreaking when someone comes in and like, tries it for $79, looks around, didn't make me rich, I guess I got to leave. Like, dude, oh my God. So I apologize. I'm not presenting the value good enough, but it's a new service. So I will come up with a strategy. I'll probably spend some time today maybe thinking about it. All right, so we got some nat gas to go. By the way, before we get there, are there any other trades that we want to look at? Euro Swissy we could look at, and silver we could look at. What do you guys want? Euro Swissy or silver? Let's do a poll, and then I'll do nat gas. Start a poll. What next? Okay, Euro Swissy silver XAG. So anyways, Master Trader and Jim, I hope that 1 hour response addressed your comment. Oh, I don't know. Why can't you trade it? I don't know. Most likely, it's a money loser for the firm. Not enough people request it. Well, maybe there's a compliance issue. Okay. Now, I fought hard for probably 3 years to get things like the stock market on Trader's Way for you. And, Trader's Way being a trustworthy, ethical foreign exchange firm, we're really, really worried about compliance. It was a compliance issue. And they're like, we know we can do it, but we're worried because, I don't need to speak about U.S. regulatory issues, but they were worried. But I fought hard for you, and after a while, they're like, okay, right? So there you go. But why not Nat Gas? I don't know. Contact support. Yeah, but it may not be live, Kyle. I know at one time it wasn't. Okay. All right. So let's see what you said in the poll. Really? I thought silver would be the one. All right. Let's do Euro Swiss franc. And here we go. And we'll move it into here. So here's the inevitable pullback. Okay. I can move my stop to break even. Okay. WWWD. What did Wayne do? Down, up, buy. 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 Okay. So now, in or out? Should I stay in or should I get out? Well, I want to look at this level. As long as we're above that, we're cool. And if it turns north at a market open, which is now, I can probably survive this. Okay. Okay. What do you think? I'm vulnerable, right? Right now, on the market open, we're right here. Okay. Let's identify this. Resistance, 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 higher high relative to the previous one. Are we going to use this as support? Maybe. And if it doesn't, I don't lose any money. Now, if I left my stop down here, I get this sort of zone 2, which is tomorrow's entry. So all these are still supportive prices. So I could leave my stop where it was, okay, and go for that. Okay, so remember what I teach you. This is a buy zone. Higher high. This is a buy zone. Higher high. This is a buy zone. Higher high, or not quite. Okay, so let's go all the way here. Okay, higher high. This is a buy zone. Higher high. This is a buy zone. Higher high. You see how it always comes back to my buy zone? So maybe we'll get a higher high and at some point a new buy zone. Don't you love it? Don't you love trading? Don't you love it? And we keep doing this forever and ever and ever until she betrays you and stabs you in the back. Okay? Cool. Now maybe just out of fun, let's do silver anyways, and then I'll do nat gas. Okay, gold just hit the target, by the way. Remember what I said earlier? Even if it's technically still bullish, I have permission to exit here and re-engage when I feel it's necessary. Okay? Money in the pocket. Why is that important? Well, the next buy for me could be as low as the future 21. So let's do this. So how long will it be if it falls to that level? How long will it take us? Well, the slope is kind of like this. So maybe I buy it at 23 and kick it north. I also could count this as a possible counter trend, which could get us all the way back to 22. Well, hell's bells. I don't want to hang on that long. So give me my money, and I'll see you at the 21 or central pivot. Once again, I know my price. This one is dynamic because it's based on price action. That's dynamic. And this one is, okay, price. This is market based on March's market. This is the April projection. This counter trend. So that's a market entry, and this is a price entry. Okay? Oh, I haven't used Wyatt pivots in 8 years. Look. Biased. Even these have been renamed. All right, let's do our natty. By the way, did you guys like the silver trade? How would you rate the silver trade? 10 being the best, 1 being the worst. See what I did on this higher time frame? Up, down, up, down, up. I think you guys are too kind, but that's not what I was going for. But yeah, okay, well, thank you. But you see, it's the stuff that's taught in the training course. So the way I teach you, all the techniques I teach you is you should be long here or here. We just covered it today in great detail. You're here or you're here. Kyle's 2. What's the rationale for that? I thought maybe that's a bit low. That's nearly horrific. Oh, okay. I don't know. I mean, look, if you right. All right, so there's that, and now let's do some natty. Did you guys click the thumbs up button? I've been trying to give you some real value, get your money's worth. Thank you. Thank you. I appreciate that. All right, let's get out of metals and let's do some natty. Do I have natty over here? Okay, we'll get off the silver trade. Boo, boo, boo. We'll get off the silver trade. And, yeah. Oh, and by the way, this trade, this trade, this trade, this trade, and this trade were all set up by TRADARS. I'm not joking. It's not some funky sales pitch. It's the God's honest truth. TRADARS gave me a heads up on all of them. Now, I happen to already believe in all those things. So I did my job as a portfolio manager. I wanted to trade all of those things. TRADARS just was my technical analyst and said, hey, boss, look at all these trade setups I found. I'm like, ooh, these look good. Why? I had an opinion. So I went to the charts, found opportunities. Now, I didn't trade it exactly as TRADARS because I also know how to trade. So I set it up the way I do it. And it was my analyst confirmed. It's beautiful to have that team. I have a team now. The best kind of team. The one that doesn't burn microwave popcorn at 4 o'clock in the afternoon. So that's the worst kind of team. All right, so where's my natty? All right, let's go nat. Okay? I mean, do you guys remember going to an office? Oh, well, at 1 o'clock, we're all going to meet in the break room because it's Kathy's birthday, and we made the women buy a cake for some reason because, the men never do it. You're like, really? I don't even like Kathy. I have to go to this stupid thing and eat that crappy cake? I'm like, I'm busy. I don't have time for this stuff. And then what? 2 days later, oh, it's Terry's birthday. Oh, we got him a cake too. And you're like, don't you guys ever work? Like, why do we? I never want to go in the break room. Who has time for that, right? So anyways, I don't miss the office. All right, so Natty, what do you think? Technically, yeah. Does anyone miss commuting to work? Anybody miss that? You know what I miss? Wasting, right? If you wasted what? A half an hour. Let's say if you're lucky now, you have a half an hour commute, right? So that's 1 hour a day. Times, let's say, 20 a month times 12. Whoa. $240 hours wasted. Okay? Holy smokes. You can monetize that too and say, let's say you make $500 an hour. I don't know how much you make, but maybe you make 100 hours. Maybe you make 500, maybe you make 1,000, but you multiply that by your hourly rate of not being productive. Okay? It's extraordinary, right? Then what? Okay? Then you pay $5,000 a year in insurance, $5,000 in car maintenance, $10,000 in gas. Oh, you lease your car, $10,000 in car lease. You're like, dude, okay? You're losing $150,000 a year just driving to your crappy job. Oh my God. Okay, anyways, nat gas. Pete wants to know nat gas. Well, this is what my chart says, Pete. First wave of profit taking will occur right here. Okay. This chart has this is the buy zone on Asia Open. London boys carried it up. Okay. And now the London boys are taking profit and going home. Okay. So now what? Well, we need a little more information. And I would carry this forward. I'll even make this a little bigger. Okay, I'm going to carry this forward. And somewhere around there, if I have the opportunity, now we don't know what opportunity is going to be prepared. This might go a little higher before it comes down. We don't know. But remember, I taught you guys price and time. Currently, this might, again, if we make a higher high this afternoon, it's going to move our price up a little bit, probably off that wick. So we don't know how the rest of the day, I'm planning tomorrow. That's the other thing. Most amateurs don't think forward. They only think backwards. So there's two plans here, depending on what happens this afternoon. If we make a higher high this afternoon, then the trade is going to look like that tomorrow. Now, the interesting thing about tomorrow's trade, it could happen this afternoon. Okay. The second thing is we've peaked out here and we come down and then, okay. So I know the two prices. I know the two plans. I just don't know if they're going to happen or when they're going to happen. But if they happen, I know how to go from patient and disciplined to active. That's tomorrow. I'm already done tomorrow. And amateur retail traders are logging in trying to figure out what to do today. There's a difference, isn't it? So let's go back 24 hours ago. If you had asked me to analyze this for you, because I work for you. So let's say Pete's my boss. So Peter says, Wayne, get my office right now and bring your nat gas charts. So, yes, sir. Peter's like, set it up, boy. Okay, well, we're at a profit-taking zone. So buying now would be wrong. But it has made a higher high relative to the previous higher high. So I would suggest looking for a higher low. You could use a Fibonacci, okay? Just to measure from this peak to that peak to the down. You can use old price action. I'm going to use a combination of Fibonacci, which is pivot points. They're very, very similar because pivot points are looking at the high, the low, and the close, and it does its analysis. So I would say to you, Peter the boss, I'd say, sir, somewhere between 1.7 and 1.65, go long. Target 1.85 to 1.91. Did you know I would do that all the time? If I worked for Peter, that's what I would have done yesterday, and I'm already doing that for tomorrow. It's only technical analysis. Okay? It's only technical analysis, but if you want an analyst to work for you for $80 a month, okay, look at it. It's extraordinary. You're like, okay, tell me what you see coming. That's why it's called a radar. Hey, technical analyst, tell me what you see coming in commodities. Okay? Look at all the different time frames. Some of these are day trades. Some of these are scalps. Some are in between. Okay? But these are all plans that are forming. Okay? These are all plans that are forming. It's beautiful. Now, as I showed you guys yesterday, you're like, okay, there's emerging patterns and then there's breakout patterns. So you turn emerging off and just show me things that are like, look like are playable today. Boom, 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 boom. Okay? Think of it as like a change of direction. Okay? Hey, technical analyst, grab your S&P 500 chart. Tell me what you see. Well, on the 15-minute chart 11 minutes ago, we have, approaching support level at 51.94 identified today. This pattern is still in the process of forming. Possible bearish price movements toward 5194 in the next 7 hours. So to me, it's a pissy little scalp. But if I was worried about this coming down today, I could hedge my institutional portfolios that I manage. Okay? You're like, well, I want longer term than that. Well, that's just a pissy little scalp. So it tells you modest down on a 15-minute chart. Here's a modest down on a 30-minute chart. You can go through these and say, well, I want to look at S&P 500 maybe on a longer term. Well, S&P 500 on an hourly chart, much stronger up. See, the down is a buying opportunity here. Remember, if you're a bull, you buy dips. So on the short term, it says it's probably going to dip to 51.94. And then you go here. That would be a cool buy. Nice. So I can go to my chart now and look for that and set it up and maybe trade it on an hourly chart. Is there anything else? Yeah, look at this one. You knew this 2 days ago. Now, look at much longer time frame, right? So this is bigger. So maybe this is where people get confused. I don't know. But you have to ask, are you day trading? Are you scalping? Are you spot? Like, what are you? Okay. On a higher time frame, A, B, C, D, forming a possible double top. Whoa. I'm going to stick with the day trade. I'd say this is the day trade for today. So you go to S&P, and remember, your technical analyst said, hey, boss, check this out. I'm like, okay, I'll take a look. Good job. Go get a Jamba Juice. Okay, now the boss is going to do some work. All right, so I've already done my analysis. You can see what I'm thinking. SPXS is a shorting mechanism. Okay, all right. So S&P 500 may be up for a bit, and then what? So you got to go, so the TRADARS setup, you see, is on an hourly chart, 60 minutes. Okay, and it shows a buy a dip scenario, so maybe at the market open. So I could, maybe, we don't know if it's going to work, it's just technical analysis. We could plausibly, and let me set up my indicators properly, biased pivots will make it bullish, and bullish for the day. Okay, cool. And so now I take over. The analyst pointed me in the right direction, and I say, okay, I was interested yesterday at this price. So we're back here, but now at a New York Open. So I could thread together a trade plan that looks like this. My target on the short run, if this works, okay, is here. Now, I already have all this plotted out. So if I get an opportunity today, and look at no lower low, no lower low, no lower low, no lower low. All right, so if I'm a buyer and I catch a bid, okay, I could go as high as 52.37. The problem is the M2 is the support, which predicts this price. Profit target conservative. 5229.5. So 5230. Okay, cool. And now I drop onto a 5-minute chart and I have my finger on the trigger. I have the price. I'm trying to figure out the time. When do I buy it? When do I buy it? Okay. And now you use price action or pivot points or oscillators. You do you. You make a decision. Is this going up? Yay or nay? And you do it. Now you might lose money, but that's part of trading. Okay? So you can make things very simple if you wanted to. You can say on a 5-minute chart there is no market, there is no trend. There's only price. And it's so funny because my 5 EMA is missing. I haven't manually added added a moving average in so long. There we go. Fire brick red. Okay, good. Exponential close. Okay, cool. So I could sit here and say, Wayne, when the 5A cross goes up, I engage. Okay? So let's just pretend it did it. Done. Drop a stop. Take a walk. Let's put it below that. Okay. Okay, so that's the first thing. That's a little day trade. I don't know if I love it. It's only technical analysis. Then what? What does it look like on a weekly basis? I'm like, what? So let's get rid of some of this old analysis. Okay. In fact, let me zip out here. Let's get rid of this, even though it's helpful. You should already know it. Get rid of that too. Okay. Cool, because there's definitely a possibility for down, right? All right, so it's more like if it goes up, where would it go? All right, well, let's analyze this from a different point of view. Where's the central pivot? I just bought it on the central pivot. Where's the support? Okay, looks like somewhere in here. I'm going to call that an M2. So my next target could be weekly. The weekly target is M2 to there. So I could stay long to 153. Okay? Then I do monthly. What's the conservative target for the S&P 500 monthly if you're a bull? Let's see if I can get it on the chart. I don't know if I can even get it on the chart. Right there. 5281. 5281. 5281. 5281. 5281. 5280. Let's be conservative. Done. Oh my God. Oh, I love trading. Oh, I love a plan, huh? Do you guys remember A-Team? Face? The guy with gray hair would smoke cigars and come up with all the smart plans? I'm not saying, I'm just saying. Well, the thing is, right? So Jim makes a comment like sometimes, well, often TRADARS is looking at multiple time frames. So it'll tell you like, oh, I see this short here and that there. What you want to do is analyze what they're doing. Like it's not an alert service. It's doing technical analysis, right? And it's like, here's a basic pattern. Can you see this pattern on multiple time frames? If this was a 4-hour, can you see this on a 15-minute chart? It would look like this: higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower low, higher high, higher low. Consolidation: lower high, lower low, lower high, lower low. Consolidation. Okay. The idea is to understand. Now, TRADARS will just show you. It just does the technical analysis. But you have to understand, like, is the short this move? And is the long this move? It's going to show you both. It's like, dude, this looks like it's going to come down technically. Cool. But you're like, that's great. So maybe I should take profit on my long. Meanwhile, when it consolidates and then goes long again, maybe I want to go this way. It's going to do technical analysis on multiple time frames. And they don't counter each other. They complement each other. Okay. Just quickly, we can look at the rest of the week, which is sonars. Okay, tomorrow's big event, although we have New Zealand interest rate decision tonight, TRADAR says there's no underlying intrinsic pattern in the volatility, but we do in tomorrow's CPI. And there's all the direction, if it as expected or less than expected or as expected. There's all these patterns and probabilities. So, right? So you can see there's a scalp, a spot, a swing trade, all the probabilities. Remember, it does it from past performance. So like just randomly pick out CAD and say, we can draw the following conclusions from the expected movement of USD CAD based on the last 12 USD inflation rate decision, right? Month over month in the US. If the actual is greater than 0.3, 100% chance the 2-hour trend will be up for USD CAD. You're like, dude, that's very specific. And it's very confident. Well, it's not confident. It just analyzed past performance. Does not predict future results. But, okay, now, how does it know? This is every scenario where it was greater than expected. Look at this. USD CAD 15-minute chart. News closed higher. News closed higher. News closed higher. News closed higher. Insane in the membrane. I just picked a random pair on a random news event, and we can go back years, and on top of that, have these pre and post patterns. Like TRADARS is incredibly smart. So when somebody signs up, looks around, and quits, I honestly don't understand. And I'm doing somebody a misservice. I've lost a soul that I'm trying to save. It's concerning to me. So if you know what's missing, please email me, Wayne at FX Bootcamp. You're like, Wayne, we need a training course. Wayne, we need to know how to use this tool better. Wayne, we need a live group. Wayne, we need a community. Wayne, dude, this is, it's a passion project. This needs to be successful because it's, I don't know. I'm making too big of a thing of it. But I'm very, very concerned. With that being said, let me know how it can help. I'm always trying to improve. There's great training. I'm going to post, I'll ask Ryan for permission and Denise too. If I can post their video going over profit taking and the process, the painful process of that decision making, it's extraordinarily good. Like, standing ovation. It needs to be seen, even if people didn't pay for it. And that's what you get from Investor Bootcamp. So I'll leave you guys. Have a wonderful trading day. If you're in my swing trading group and day trading group, we meet today at 4 p.m. to download and review all the economic reports from the previous week. Actually doing the homework that you should be doing as a professional investor. Okay? So, peace on earth. May the pips be with you. May your profits be above average. I'll see you soon.